time for you to present. I'm going to leave the screen now and then you take it away. Ready?
Ready.
All right. I'm leaving now. Go.
Yes. AI adoption by enterprises would lead to solid growth. Hi, my name is Surya Dakal. My coverage for today is TSMC with a buy recommendation based on target price of Taiwan dollar 1826 and upside of 28%. I derive my target price from DCF based valuation using WACC of 10% and terminal growth rate of 4%. My valuation is based on three key stories. The first story is AI adoption would drive revenue growth. The second, microprocessor including GPUs would drive product growth. The third one is leading edge 2nm process node would drive competitive advantage. The company has some certain risks. The risks are client concentration and talent acquisition are the main risks. Similarly, rapid shift in technological development in the industry, especially from competitors, could affect market share. The background of the company, Taiwan Semiconductor Manufacturing Company is a Taiwan-based company established in 1987. TSMC manufactures chips for customers using their designs and specifications, acting solely as a foundry. The USA is a company's main market, accounting for 70% of revenue. TSMC has strengthened its leadership in the foundry to market with 39% market revenue share in 2025. AI adoption would be the main revenue growth driver. Business of all kinds have begun using generative AI to enhance operational efficiency. Their focus on AI is business of TSMC. The server market and networking infrastructure market are expected to grow at a CAGR of 12% and 6% respectively globally by 2030. Labor shortage is a global challenge. A humanoid robot is the solution. It works 7K hours annually, while the human works only 2 hours. Microprocessors, including GPUs, would drive product growth. There is an undersupply of chips. In the near term, GPUs and HBS demand exceed supply. NVIDIA alone is using about 70% TSMC's CoWoS packaging space. A leading edge 2 nanometer process node would be the competitive advantage. TSMC's 2 nanometer capacity is fully booked until end of 2026. Apple's A20 and A20 Pro are driving force when it comes to the adoption in 2026. The semiconductor market is projected to grow from US dollar 0.6 trillion in 2024 at a CAGR of 9%, surpassing US 1 trillion by 2030. TSMC is the world's largest foundry by far, with 65% market share by revenue in 2024. Morningstar projects annual capex on cloud infrastructure to surpass US 450 billion by 2027, with a CAGR of 24%. Semiconductor Industry Association expect the global market to exceed US dollar 1 trillion by 2030. Now talking to the quarterly reports, the total revenue increased by 30% year on year to Taiwan dollar 989 billion, driven by high demand for AI accelerators and data center chips. The company saw almost 2% year on year growth in gross margin, surpassing 59%, which is pretty high. Some constraint for the companies are operations is a major constraint, and people is also a major constraint. The supply chain risk is relatively high due to geopolitical tension between top tech countries. TSMC has very few but high value customers that signals high concentration risks. TSMC is offering high pay to attract top talents, as the nature of the business is concentrated around innovation and technological improvement continuously. Top tech companies are offering billions of dollars to attract top talent. That is a huge risk for the company. HPC is the primary revenue contributor, accounting for more than 50% of the total revenue. Smartphone platform is the second largest contributor with 35% of the total revenue. The advanced packaging solution would enhance the smartphone revenue due to improved chip performance. 7 nanometer and below chips contribute almost 70% of the revenue by technology, and this would even increase in the future as the company launched 2 nanometer chips in fourth quarter 2025. TSMC appears attractive relative to 940 non-financial companies in Taiwan. The fundamentals ranked in the top 10% in Taiwan due to strong profitability and asset turnover driven by high margin. Valuation is unattractive as it trades on high PE and PB multiples. Momentum is attractive as both price and fundamentals momentum are strong. Balance sheet there is no balance sheet risks. However, the company's beta is higher than the market and it is volatile. Profitable growth consistently ranked in top 10%. Profitability has ranked in the top 10%. Asset efficiency has ranked top 9 throughout the period. However, expense control ranked top 1 throughout the period, upset the poor asset efficiency. Sales growth has fluctuated widely. Expense direction also fluctuated widely and climbed to the top rank in the past 12 months. ESG, the overall ESG score is 87%, environmental 100%, social is 100%, governance is 40%. The environmental is 100% because TSMC has adopted various natural resources conservation methodologies to address potential shortage in electricity and water. Social, it has ESS team operates at the corporate level to manage policy establishment and enforcement. Governance is 60%. The profit of the company has increased. I have projected to increase the profit of the company in 2025 to almost 3.91 trillion Taiwanian dollar. The account receivable and inventories are increased in my forecast because to support their expansion plan. The ratios I have projected a gross margin 57%. That is, I believe they can maintain their existing gross margin. Asset turnover I have projected 20% and increase gradually over the year. Return on equity I have projected 31% and that will increase gradually over the year. And dividend payout ratio I have projected 35%, just in line with the past trend. The change in account receivable and change in inventory we can see here in the cash flow, free cash flow section. And this is the increase in account receivable and inventory is to support their revenue growth. And I have projected capex to increase slightly to support their expansion plan. On the PB multiple side, TSMC looks cheaper compared to the information technology sector in the global market, but expensive in the Asian market. TSMC trading at a significant discount compared to sector average globally based on 2025 PB to ROE multiple, but in line with the Asian market. On the PE multiple, TSMC trades at a significant discount. I expect EPS growth to be lower in 2025 in the Asian market due to high capex. This results in TSMC trading at a significant discount based on 2025 PE to EPS growth multiple compared to the world, but overvalued compared to the Asian market. The valuation and target price, I assume risk-free rate of 2% considering US bond market and market equity premium of 7% in the Taiwan market. TSMC has been high beta stock, so I assume a beta of 1.25, which is slightly lower than its previous average. I use a high terminal growth rate of 4% and free cash flow to the firm because TSMC has significant capex to growth and may issue to or repay debt regularly. In my best case scenario, I anticipate gross margin maintained at 57% current level, leading to a value of Taiwan dollar 1,826 per share based on the FCFF methodology. That represents 28% upside. In my sensitivity analysis on the following page, we can see here My base case is at 57% margin, and if this margin is decreased by 2%, then the value would be 1786, and if it increased by 2%, then the value would be 1866. The geopolitical risk is the major risk for the company. TSMC manufacturing footprint is heavily concentrated in Taiwan, but the main revenue market is the USA. The geopolitical tension between countries significantly impacts TSMC business. Customer concentration is another risk, and similarly, talent acquisition is another risk. Top tech companies are offering billions of dollars to attract top talent. The nature of the business is centered on innovation and technological improvement within the technology sector, so human capital is key. So, by considering these all factors, I believe the company has very good growth potential. So, I recommend buy to TSMC, it, which would be 1826 and upside of 28% in the near future. Thank you. If you have any questions, I'm open for that now.
Okay, good one. So, I mean, it seems like good growth, not that expensive, compared to what we see in the U.S. as an example in the tech space. This is going to sound a little bit strange, but why wouldn't you have more upside? Like 28% is very high, upside. But I'm just curious, like it just seems like everything's going right in this sector. What is it that may concern you or constrain you from getting even more positive?
Yeah, actually, semiconductor industry is the backbone of the AI, and in especially in TSMC, they have already recorded 33% growth in the previous quarters. So, and their expansion plan is also the positive, and that everything considering, I believe the upside of 20%, 28% is genuine.
Okay. And let's go to your valuation page where you showed the free cash flow valuation. Okay. So you got a question about the risk-free rate. And maybe you can just talk about the risk-free rate that you're using, market equity risk premium, beta, how you end up at your 10.8, and whether you think your 10.8 is a little bit high or a little bit low.
Now, considering the Taiwan market, risk-free rate of 2% is slightly higher, but I consider the US market as well because TSMC is expanding its business to Arizona, USA, and in Germany as well. So, considering these all factors, 2% risk-free rate is genuine, and market risk premium of 7% is average in the Taiwan market. So, it is okay. Now, considering now talking about the beta, the company's beta is a little bit higher than market, so 1.25%. I assume it is genuine.
Okay. Yeah. So let's go to another one, which is it's a good company, but I have a question about a lot of cash. Why don't they use it to invest? That's at least in something they can use, like software from Synopsys or Cadence Design, as an example.
Can you reframe your question again, please?
Yeah, the question is, they got a lot of cash. Why aren't they investing that in software or things like that?
No, they have been using their uh, yeah, using cash, but still they have surplus cash. Maybe they have any other plan in the future, but at the minute, the using their own cash, it is they have a cheap option to collect debt in the Taiwan market. It is less than 1%. Maybe that is the reason they are not using their cash and they are investing their cash in somewhere else for for the interest. That could be the reason.
Okay. Roman asks, would you reckon that SMIC in China would pose a long-term threat to TSMC's growth, mainly because SIMC gets, extensive government support from the Chinese government?
I don't think it will be a threat because TSMC is already a market leader with 65% market share. So in the short run, I cannot see any threat from any other competitors.
Okay, another one is Intel claims its 18A process will lead over TSMC's A16 node. Do you think it's feasible that Intel could capture a major whale customer, a big customer from
I'm
TSMC?
aware that Intel is developing advanced chips, but I believe the TSMC has also been working on even better and smarter chips, which they are planning to launch in 2027. So in the present scenario, Intel cannot develop the chips in within 1 year. It takes time. So by the time they will capture market and they will develop even smarter chips, so it will not be a threat from any other competitor in the short run.
Okay, how does it feel to finish this assignment and present this company valuation?
No, actually, I was really excited. I did pretty well, but a little bit at the time of presentation. Just forget that one. Yeah, I was really excited, and I feel pretty, confident while presenting.
And what's different, what you understand now after doing TSMC compared to when you finished valuing Fastenal? I think you probably felt you had a lot of great new knowledge. What's different between Fastenal and TSMC for you?
The Fastenal was pretty straightforward, and I wasn't, it was easy to do, especially the valuation side, financial modeling side. But TSMC is a complex company, and I learned a lot from this company, how to do valuation and we have to tackle with individual items, for example,
Hmm.
balance sheet items and other growth items, how we can tackle that. That gave opportunity to learn by this TSMC.
Great. All right. I'm going to remove you from this and I'll see you in the Slack channel. Way to
Thank you,
go. Yep. Yep.
Andrew. Thank you
Yep.
very
So that was TSMC. That was Surya, one of the students, came in not valuing companies and now has finished his second company. If you want to build a competitive advantage in company valuation, join us in the next Valuation Masterclass Bootcamp. The next one kicks off on February 16th, 2020.